89% of Americans distrust the government to do the right thing. This source comes from the New York Times, CBS News, October 2011. The global economy is experiencing its most critical financial crisis ever. Your wealth, along with your future comfort and security, are all threatened. Your children's children will be born into massive debt if you do not take heed to what's taking place and educate them otherwise. While most will have their heads buried in the sand, a few around the world have grown tired and are finding ways to position themselves for this financial tsunami that will take place. We'll talk about how to position yourself on the right side of this crisis later in the presentation. So just how did all this start? And please believe the problems aren't just confined to the United States. We are experiencing a global recession. Unemployment worldwide is increasing, debt is rampant, infrastructures are crumbling, and commodities prices are actually rising, which is a good thing for those that are positioned correctly, which we will discuss later. Now, the problem started with the creation of the Federal Reserve banking system. However, we don't have time to go into the history of the Federal Reserve scandal in this presentation. However, I do encourage you to do your homework on the subject matter. Let's fast forward. The Federal Reserve, which is not federal at all, but a private banking institution, but the Federal Reserve under Alan Greenspan pumped the economy with liquidity during the housing bubble, which started around 1989 when credit restrictions were eased up on the purchase of real estate. The strategy worked for a while due to low interest rates. Homes were purchased and home equity loans were taken out nationwide. The Fed started to inflate the housing bubble around 2001, right after the dot-com bust, which declined the stock market from 2000 to 2001. Now, with the stock market decline from 2000 to 2001, over $1 trillion of wealth, in which the lion's share was retirement and savings for hardworking people of this nation, just disappeared. The housing bubble's ringleader was coordinated from Wall Street, where brokerage houses bundled the creatively financed mortgages and sold them as bonds and derivatives to retirement and mutual funds, and also to international investors. Portfolio managers were directed to buy subprime bonds as other bonds matured. Now, I'll give you a warning. Portfolio managers, stockbrokers, and financial advisors have a fiduciary responsibility to the company that they work for, not you. This means their loyalty is with the company and ensuring that they make them a profit before they even consider your individual portfolio. No one has ever obtained wealth by blindly letting some broker who's paid on commission manage their portfolio and turn it into real, lasting wealth. Let me ask you a question. Did your broker advise you to sell off your real estate holdings before the subprime crash in 2008? Did they advise you to diversify your holdings into gold when it was selling for as little as $300 per ounce? Did they even forewarn you before the market crash in 2000 and 2008 to move some of your paper assets into real tangible assets to preserve your purchasing power? The answer is obviously no, or you would probably not be watching this presentation right now. The bottom line is no one will look after your wealth and your financial future better than you will. Now, getting back to the story, it's the subprime segment of the industry that has now collapsed, triggering the recent highly publicized demise of two Bear Stearns hedge funds, Fannie Mae and Freddie Mac, followed by many other bailouts that we taxpayers are unfairly left holding the bag. We believe in bailing out people and not the banks. Now, with the Feds printing more money on a daily basis, pumping the economy with more and more fiat currency, our purchasing power continues to decline, and we will see a collapse of the dollar as the world reserve currency very soon. And this is an article where Peter Schiff is quoted. He's the CEO of Euro Pacific Capital, and he's quoted by stating, Schiff blames the Federal Reserve's loose monetary policy for the debasing of the U.S. dollar. Rock-bottom interest rates coupled with QE1 and then QE2. If the Fed keeps this up and continues to print money, Peter Schiff says the U.S. dollar could be worth less than toilet paper. And this source is from Yahoo Finance. Now, the U.S. national debt as of January 4th, 2012 is over $15 trillion. The estimated population of the United States is a little over 311 million. So each citizen's share of this debt is $48,818.73. The national debt has continued to increase on an average of $3.9 billion per day since September 2007. This is some post-Christmas shock of Christmas of 2011, and this shock comes to the American financial ego as Japan and China ditched the dollar in exchange for direct trade. And the source here is Bloomberg, and I quote, Japan and China will promote direct trading of the yen and yuan without using dollars and will encourage the development of a market for companies involved in the exchanges, the Japanese government said, end quote. This chart that you're looking at here is from the Federal Reserve, and this chart is the Forex market, which basically shows you what other countries, foreign countries, are actually purchasing U.S. dollars. So as you can see, from about 1990 on up through the year 2007, you see a steady incline in the purchase of U.S. dollars by foreign investors. From the year 2007 to the present day, you see a decline actually going into the negatives of foreign investors that are purchasing U.S. dollars. And that right there should be a wake-up call for you. So who's buying up all the U.S. debt? Well, the Federal Reserve is actually buying the debt with currency that they print out of thin air. Now, a country cannot print or borrow its way to prosperity. It's just impossible. You cannot balance the budget by paying debt with more debt and mortgaging our kids' future. Is there a financial tsunami just brewing on the shores waiting to hit the U.S. population? Yes. Will the dollar drop in value to the point of being replaced as the world's reserve currency? Well, all evidence supports this conclusion. All fiat currency in the history of the world has failed. With the recent downgrade of the United States credit rating by S&P and the downward moving stock market, more Americans than ever before are concerned about the prospect of investing all their retirement assets in the U.S. financial markets. The 2008 financial crisis created over $1 trillion of losses for retirement asset holders and showed us the danger of trusting Wall Street with all our retirement investments. Facing a $14 trillion fiscal hangover, The Treasury can no longer count countries such as Japan and China, as we just seen, to be dependable buyers of U.S. government debt. Facing an uphill battle and increasingly skeptical buyers, the government is changing tactics and actually targeting the biggest pile of money available as a means of dealing with its fiscal follies. And that big pile of money is $3.6 trillion sitting in U.S. retirement plans, including 401k plans. Now, according to widespread media reports, the Treasury Department and the Department of Labor are actually planning to stage a public comment period before implementing regulations that would require U.S. savers to invest portions of their 401k savings plans and their IRA accounts into annuities or other steady payment streams backed by none other than the United States government bonds. 7 countries have actually rated retirement plans of their citizens, and the U.S. may soon follow suit, as we see here from a recent article. The federal government, the other 7 countries are Argentina, Hungary, Bulgaria, Poland, Ireland, and France, and Bolivia. They've taken over citizens' retirement money to make up government budget shortfalls. Now, according to Robert Mundell, who's an economist at Columbia University, I quote, "Total monetary and financial collapse of the massive government debt bubble is upon us, with devastating real-world consequences for your savings, property values, investments, and other assets." Now, if the prospects, and this comes from Money Morning, which is a great follow the economy and what's happening in the United States, and I quote, "If the prospects of your entire future being placed in the hands of the federal government doesn't scare the daylights out of you after all we've experienced so far, I suspect that nothing will." So what we're looking at here is we're looking at the total demise and really the death of the middle class. All signs lead to this conclusion that the middle class will be wiped out. In fact, there is an interview here, and I'm going to share just a clip of the audio with you, with James Turk, who's over Gold Money, and Doug Casey, who's actually over Casey Research. And these are 2 economists that are very, very well educated and well versed in what's taking place in our global economy. So let's just play this clip here, and I'll let you hear what Mr. Casey has to say.
Parts of society, which is basically the middle class. I mean, the so-called upper classes can take care of themselves. They can hire the lawyers to interpret the laws to their advantage, the accountants to keep their taxes down, the investment advisors to get them into good deals. They'll be fine, unless things get so bad that we eat the rich. And lower classes don't have anything anyway, so they're not known. It's the middle classes we're talking about. And the problem is this. It's that if those people save, produce more than they consume and save the difference, what do they save it in? They save it in dollars or whatever the national currency is. And the problem is this, is these stupid governments all over the world with their quantitative easing measures are basically going to destroy the national currencies, which means destroy the savings of the middle class. And that's going to be a sociological earthquake, because I'm afraid that almost all the currencies of the world over the next generation are going to reach their intrinsic value, which is essentially zero. And it's going to wipe out the middle classes with it. So this could be really quite serious.
So if your retirement and entire savings are being held in fiat paper currency, you're setting yourself up to be on the wrong side of the fence once the poo hits the fan. Now let's take a look at how to position yourself on the right side of this financial crisis to safeguard and protect your wealth and life savings from disappearing. Again, we believe in bailing out the people, not the banks. Over the past 6 months, We have helped over 1.5 million families across the world to create their very own financial bailout plan, utilizing the resources, contacts, and leveraged income sources within our system. There are really but 5 key strategies you need to ensure you have in place in order to profit from the coming financial collapse. So let's go through these key strategies. Key strategy number 1 is becoming a business owner. The tax code was written for the free enterprise system, those in business, to benefit the most, not W-2 earners. The quickest way to put money back into your pockets is to reduce your taxes. And that's me holding up one of my books out of my library, 422 tax deductions for businesses and self-employed individuals. As a W-2 earner, you do not get to take advantage of those 422 tax deductions. But as a business owner, you do. And that's the quickest way to put money back into your pocket is to reduce your taxes. Now, I'm sure you're familiar with this cash flow quadrant by Robert Kiyosaki. And what this quadrant shows you is there's four types of individuals out there. There's E for an employee on the left-hand side here. There's S for a self-employed individual. Then on the right-hand side at the top, there's B for a business owner, meaning you own a system that works for you. And then I is an investor. Our program and our mission and what we strive for is to help individuals and families to move from the left side of this cash flow quadrant to the right side, becoming a business owner and an investor. Key strategy number 2 to position yourself properly and profit from the financial collapse is to obtain real financial education. There's a watered-down version of economics that you can find on any news station, on TV, and late-night infomercials. Example, some people have never actually owned real money. Here's what I want you to do. Take a bill out of your pocket or your purse and look at it very closely. And as we see here, this is a $20 bill. Well, anywhere on this bill do you see the word money? You will not on the front or the back side. In fact, you see right at the very top, it says Federal Reserve Note. And then in the left-hand side towards the bottom, it says this note is legal tender for all debts, public and private. But nowhere on the bill do you see the word money. The only real money that's out there is gold and silver. In fact, according to the U.S. Constitution, Article 1, Section 10, and I quote, "No state shall make anything but gold and silver coin a tender in payment of debts," end quote. So, does that mean the currency we use today is unconstitutional as a form of payment? I'll leave that for you to answer. Now, how did we get to this fiat currency that we use today? Well, before 1933, all debts, public and private, were paid in gold and silver. Gold confiscation happened around 1933 when Roosevelt ended Americans' right to own gold. Basically, the citizens were fed lies and said, hey, your gold and silver is too heavy and bulky, so for convenience, we will issue these Federal Reserve notes in exchange for your metals. Gullible citizens said, okay, well, that sounds like a great plan. Plus, we can take the notes to the bank and demand gold and silver any time, right? Well, it worked for a while until 1971. Nixon said the U.S. would no longer convert Federal Reserve notes for gold and completely abandon the gold standard. This is around the time fractional reserve banking came into play. Greedy bankers wanting to make more and more profit from hardworking citizens by lending more money out than they actually had on reserve. Imagine that. In 1974, Ford signed legislation permitting Americans to own gold bullion again. However, that did not put the United States back on the gold standard. This is just a fraction of the kind of financial education you'll have access to when you decide to work with us. we go in depth on some other real-world financial education that individuals need. For example, in the real estate market right now, a lot of people's homes have depreciated across the country, and they're still paying mortgages on old values of real estate back when the market was good. So what we do within our educational organization, we help those individuals to get their mortgages. Actually, I'm not going to say modified because it's not a modification, but we help them to get their mortgage reduced to today's real estate values so that they're not upside down on their mortgage payments. That's just one of the many financial educational tools that you'll have access to. Plus, we show them how to protect, preserve their assets, how to position themselves properly all the way around regarding their finances. Now, key strategy number 3, and this is how to position yourself properly and profit from the financial collapse. Key strategy number 3 is quickly move your paper assets and holdings to real, tangible assets. Again, going back to the cash flow quadrant and looking at the right side, lower right, I stands for investor, meaning your money works for you. The simplest way to preserve your wealth and purchasing power is by trading your dollars for gold and silver. This is a chart here that shows you the price of gold from 2001 to 2011. So this shows you a 10-year span of gold. And as you can see there, it was trading under 300 or so an ounce back in 2001, and today's price is about $1,600 an ounce. So that's a huge gain in the last decade. In fact, all the analysts and the economists that are experts in the precious metals field says that gold was the investment of the decade, and the new investment of the decade is going to be silver. This chart that I'm showing you here actually shows you silver prices from 1963 to 1985. And you'll see a spike there in 1980 where silver actually hit $47 an ounce. And this chart here shows you a 10-year span on silver from 2002 to 2011. Actually, it's 2001, 2011. Shows you a 10-year span. It shows you a steady incline here on silver. And over the last decade or so, silver has done a very decent return of 540%. Now, me personally, I got into the market around end of 2005, 2006. So I started buying silver at about when it was $9 per ounce. Today, silver is $30 per ounce, and that's a huge return. Now, all the economists, all the analysts are saying that silver will be the next investment of the decade. And in fact, silver and gold are undervalued, but silver, all the information and all the charts say that silver is more undervalued than gold actually is. In fact, Mike Maloney, who is a part of Rich Dad with Robert Kiyosaki, he's the precious metals expert, he is predicting that gold is going to go for $15,000 an ounce and silver is going to be at $1,500 an ounce. And in fact, there is a video clip here I would like for you to see, and you can actually see exactly what his predictions are and what he's saying. So let's play that clip.
As seen in my last video, Why $15,000 Gold is Possible, Mike Maloney, author of Rich Dad's Guide to Investing in Gold and Silver, predicts $15,000 gold. But Mike says silver actually makes the better investment.
And once the common man turns towards silver because gold is too expensive, that's when the price explodes. And I believe in either scenario it's going to blow the doors off of gold.
Mike says $15,000 gold means $1,500 silver.
Silver's value was about 1/12 of gold's value. And today we're at about 1/65. It should revert back to the mean. It should probably overshoot for a little while. You may see silver at 1/10 of gold's value or 1/5. If it went to 1/10, that means $1,500 silver from just $18. I'm not guaranteeing that that's going to happen. These are just numbers. But I do expect, in 1980 it was 1/16th of gold's price. I'm expecting better than 1/16th, most likely better than 1/10th. So, and 1/10 would mean $1,500 silver, and that's a lot. I know. I don't expect it to stay there. Silver's mining costs are significantly below gold's. But mining costs have nothing to do with public fear or mania.
But silver's future is less certain.
If we just go straight into inflation, you'll see silver outperform gold significantly. Silver supply, above ground silver supplies have been dramatically reduced. We consume silver at a rate greater than we produce it. In 1980, when gold peaked at $850 and silver was $50, and by the way, gold's price is over $850 today. Silver was $50 in 1980, and it's down at around $18 today. So name something else that's selling at 70% off of its 1980 price. You can't. There isn't anything out there. Silver is incredibly undervalued.
Mike says buy the physical metal instead of stocks.
You could see the spot price go south while the real price to try and get your hands on some physical goes north. And if you're sitting on the ETFs like GLD or SLD, you could be watching your investment go down, while anybody that's holding real physical, they might be making enormous gains.
Alex Steele, The Street TV.
So there you have it. Mike Maloney with his predictions on gold and silver. Now, if Maloney is correct, gold would return a gain of 525%, while silver will return an astonishing 1,233% gain. Now, another great benefit by being associated with us is you may have the opportunity to purchase gold and silver below spot, as well as earn a commission for referring clients. And this leads us into key strategy number 4, so that you can position yourself to profit from the financial collapse. And the key strategy number 4 is to grow your income fast. As we look at the cash flow quadrant chart again, we see on the right side, the B for business owner means to own a system that works for you. And I, as investor, we've already discussed as far as gold and silver. Now let's talk about owning a system that works for you. This chart that's in front of you is a potential income chart that you can utilize to actually create your own financial bailout system. The Prosperity team has teamed up with a company out of the country of Panama and has a global opportunity for you to be involved in, to not only help you and your own family, but to be able to help other families across the entire world. For as little as a $5 investment, you can get started in creating your own financial bailout plan. And you did hear me correctly. For as little as a $5 investment, you can start your own financial bailout plan. Now, as you look at the chart, you see there's stage 1 on the left and stage 2 on the right. There are 2 stages to this program. Within each stage, you have 4 tiers and 4 rows. So this program is built on a 4x4 business model. The more people that we help, the more that it helps us financially as well as in other ways. And I'll explain that to you here just briefly. The product that you are purchasing when you make your $5 investment is a digital financial and marketing educational product. So as you advance through each of the tiers in each of the stages, you will purchase a new lesson. and that lesson will be directly purchased from the individual that invited you here. The beautiful thing about this system and this program is that 100% of the money goes directly to the members. The company does not receive any money on this particular program. However, of course, companies are in business to make a profit. Their back-end products are the gold and silver, other private investments, financial newsletters, and other things that will help you throughout your financial education and to help you to build your financial portfolio so that you can profit over the next years to come. So let's just take a look at stage one. What you will do is you'll pay your $5 investment to the individual that invited you here. There's a small $2 processing fee, so your total outlay when you first begin will be $7 out of pocket. If you look on the left-hand side in stage one, you'll see on row 1, tier 1, you're going to invite 4 other families to take a look at this video, and they're going to make an educated decision on their financial future. And most, if not over 90% of people, once they watch the video, wants to get involved, because most individuals, they don't have a plan to get $100,000 in additional cash flow over the next 6 months. So they view this as a very viable plan to help them. So most people will jump on the chance to get started and become a part of our team. So your first row, tier 1, 4 other families, they're going to go on row number 1. So when you invite those 4 families, they're going to pay you directly $5 each. You'll make $20 on tier 1. Now, in tier 2, row 2, when those 4 families above them, when they invite 4 families, you'll have 16 families that will be placed on your row 2. When these 16 families, when they upgrade to their second lesson, which comes out of profit, not out of their pocket. So when they upgrade, that's going to pay you $80 on row 2, tier 2. On row 3, tier 3, when those 16 individuals above from row 2, when they invite 4 family members, that's going to place 64 families on your row 3. And those individuals, when they upgrade to their third lesson, that's going to pay you $640. And then on row 4, tier 4, when those 64 families invite their 4 families, and these can be families or individuals. I'm saying families because most of us will be inviting families into this program, but it can be a family or an individual. So on row 4, you have 256 families or individuals. They're going to, when they upgrade to their 4th lesson, that's going to pay you $5,120. So if you total that up, that's a little bit over $5,800. The objective is to get you to complete stage 1 in your first 30 days, which is not at all difficult to do. And we train you and we help you with different avenues so that you can accomplish this with great ease. So there's lots of support to help you to make this happen. Stage 2, that's the other $93,000. That objective, the time frame for that is to have you to complete that in 180 days. So the whole idea is to help you to create your wealth plan in the next 180 days to create $99,460. Now, once you create that cash flow, this is what's going to give you the leverage and the ability to start creating your wealth plan so that you can position yourself on the right side of this financial collapse and profit. So now that you have the cash flow, the back-end products that I mentioned that the company offers, gold and silver, being able to do private placement investments, financial newsletters, things of that nature you'll have access to. Just like the ultra wealthy have their people and they have their team of people, you now, by becoming a part of our team and our system, you will now have your people where you can go to and you can get the real information that you need to be financially independent and to be a financial success for the rest of your life. So one other thing I wanted to cover here is that each of the monies that come to you on each of the rows and each of the tiers, those monies come directly into your account within our system. The company doesn't touch your money. No one touches your money. It comes directly to you, and you receive 100% of the proceeds. Now, you may be looking here below on the the 2 rows and the 9 columns down at the bottom of the chart, and you may be wondering what that is. Well, our system is really designed where we all help each other, and that's what it's about, collective economics. So, for instance, if you invite 4 people or 4 families, and they complete their plan in the next 180 days, and they cash flow $99,460. Well, because you invited those individuals, you were gracious enough to share this with those individuals. Because you did, you receive a 100% matching bonus that will go right into your account. And you see the number 4 down here. Beneath that number, there's the cash flow, which is $397,760. That will be in addition to your $99,460 above. Now, you're not limited to just inviting 4 families. You're not limited to just inviting 9 families, as you see here. You can invite as many people, as many families as you choose to. It's all about how many people you want to help. Now, we'll state a disclaimer that no income is guaranteed or implied. So moving on to key strategy number 5, which relates directly to key strategy number 4. Key strategy number 5 is to create wealth in others. This is how you can position yourself to profit from the financial collapse, is by creating wealth in others. And I believe Zig Ziglar said it best. You can have everything in life you want if you will just help other people get what they want. And right now, people want financial relief and to be able to sustain and profit from what's about to take place around the globe financially. Simply help 10 other families by sharing this video with them, and you will in turn create your very own financial bailout plan. And you don't have to depend on the government. You don't have to depend on Social Security or family or anyone else to take care of you financially. Now let's recap real quick how to profit from the financial collapse. Number 1 is you must become a business owner. Number 2, you must obtain real financial education. Number 3 is you must move your paper assets into tangible assets. Number 4 is to grow your income fast. You absolutely have to grow your income fast. The middle class will be wiped out as we know it today. So you have a choice. You have to either become wealthy or you're going to be one of the poor or one of the people that are in poverty. And we definitely don't want that to happen for you. And then number 5 is to create wealth in others. And with our system, we cover all of the 5 key strategies that you can use to profit from the financial collapse. So what are your options? What are your options? Well, you can bury your head in the sand and you can hope and pray for the best. You can even rely on Social Security and the government to take care of you. Maybe you'll rely on family to support you financially. None of these options are viable. The last option, which is the one we encourage you to do, is to get back to the person that invited you here and ask them, how can you get your financial bailout plan started immediately? They'll take you by the hand. They'll show you how to get plugged into our system, show you how to get your financial plan started so that you don't have to worry, don't have to stress, and be frustrated about finances ever again. So thank you for watching this presentation. Get back to the person that invited you here to get started today. I want to wish you a great day, a great night. Take care, and God bless.